This
Good morning,
conference will now be
everybody.
recorded.
It's December 14th, 2020. A great day for the humanity, especially in the US. We have the COVID vaccine out there, and I think the first person outside of the trials will be vaccinated today. More than hope one, of course, but for the frontline workers and elderly people in a residential home. So senior residential home. So it's a great day. As you know, Friday's my birthday. I'm going to be here partially. There's a lot of festivities planned locally. No, just kidding, but there are few. But anyhow, so we have to keep, gotta keep the blondes happy, right? So, not all blondes, excuse me. But anyhow, that's the game plan for Friday. What do we have on schedule here? Here's our morning brief starting at nothing today, nothing to be excited about. We do have a 2-day Fed meeting coming up, FOMC, and along the way, Fed chair press conference is the key, which would be at 2:30 p.m. on Wednesday. Remember, the announcement is at 2. There's some charts, but the key thing is 2:30. You probably have a trade there at 2. The main event is 2:30 to 3:15 if everything holds true. And you have to treat, in my opinion, based on my experience, and I don't think I've missed a Fed very over the last 25 years, maybe one. You want to trade each question. You want to treat each question as a trade. That is, you get in, you get out, and done. Be ready to close it the moment the questioning is finished. There has no correlation. The, the question, the answer, and its correlation to the price action are not sequentially correlated. Does that make sense? They are not sequentially correlated. That is what happened here versus 5 minutes later is totally different. So sometimes you have to skip a question. You just can't get to the next one because you're just getting out of this one, and the question's already started. So you got to really pace yourself, or do nothing. Watch it. Wait for 3:15 past holidays, 3:15 area, and to 4. That's usually some of the pressure is taken off. A lot of reversals happen, and you get a counter trend for versus a prevailing trend. You'll see it in terms of what happens. And it's also very taxing for OTF. You'll see. Not on the machine, but on its targeting. The targeting gets a little bit woozy. I'll show it to you tomorrow. Some of you have already watched it many times. You maybe didn't pay attention to it that way. I'll try to remember to highlight that to you. Not tomorrow, I'm saying on Wednesday. Okay. For tomorrow, we got Empire State Factory, which is at New York. That's crucial. It's so important. They're an import export. Industrial production, absolutely. Let's see what the consensus is. This is the third week. Remember, Friday's expiration. Okay, so yeah, we gotta take a look at this thing for one. Okay, month to month. Yeah, actually, utilization. Yeah, I probably paid attention to this. Capacity utilization more than anything else. See where we're heading there. I think there's a little softness you're gonna see that should be expected. Because of resurgence of COVID. Yeah, and some of the states have to cut back hard now because they were playing footsie with the, you know what, and it didn't work out too well, did it? Science and data will always win. You'll always win. I don't care where you're from. It's universal language. So yeah, okay. In retail sales, very important. That's Wednesday morning. PMI also, I agree. Although retail sales is going to be crucial. And we'll see how good this one will turn out. Consensus 0.3, cut back, Jesus. X vehicles +1, X vehicle and gas 2. Okay. I don't know what the control group is. I need to know more about it before I make a comment. All right. Inventories and housing market index, housing market index, right? EIA, okay. So basically, the big news is retail sales and the Fed. I don't see any of those making anything big. Maybe PMI, maybe, but I think we'll foreshadows by FOMC. Okay. Housing starts and permits the following day on Thursday. Jobless claims, hello. We're beginning to uptick again, as expected. Let's see, what do we do? Prior was 853. We have gone up Okay, hopefully we'll tick down a little bit. This is not good. This is not good at all. Yeah, we jumped up 137. Yeah, well, I think the handling of the economy right now is paramount thing we have to look at. But I think that train is in motion. It's not going to be easy to speed it up or slow it down or change its track. It takes a structural change, so it'll take some time. Nothing on Friday. Good. Nothing is going on. Now, Charlie Evans, our good buddy from Chicago Fed, which follows Admiral Tico on Twitter, he'll be speaking. He's a dove. He's one of the doves of doves. He's just really easy on money. Who else is talking? Nothing else other than Fed. Okay. I mean, Fed chair. Okay. So I can't use this list further than that. I see my assistant prints these out for me. And yeah, I thought maybe Bullard would be there too. But no, Charlie's speaking. And his non-voting, his alternate voting this year. Okay, on the FOMC. Okay, right. All right, moving forward. Let's go to PMT again. Now, I'm very stressed, extremely stressed. Okay, although maybe it's premature. Well, reason is I got an email from Time and Digest, and this has happened once before, and I've gone ballistic. It's not their fault. It's Fary's fault. I'm number 2 now, with 2 weeks to go. Can you believe that? Yeah, I can't believe it. The one last time it happened was 1 week to go. Mark Rose ahead of me, except he's short. So if he hasn't changed it, December 4th is when? December 4th is now that may not change my 10-year round. Okay, round, but it's not time of the year for this year. Damn. Okay, December 4th is Friday. 2 Fridays ago. So that means that on this day he went short. So we're a couple of days against him. It's come out. If he hasn't changed tonight, of course, this came out Saturday night. He has a window to change it until midnight last night. He hasn't changed it, then I may have a shot. Otherwise, I can't believe it. It's just happened twice to me. Now, part of it is because I've messed up too. Don't forget, I've made a couple of mistakes early on, and they all accumulate, for the year. This is not a one trade. It's a let's see. Here's my chart. Hold on. Here's the chart. Okay, so if you look at this, obviously I made some mistakes here. Had I not done those mistakes, I'm sorry, it's a delta. It's a delta what matters. Have I not done those mistakes, I will be fine. But I made mistakes. So now this is going to be updated. So where we are as of last night. So we'll see. I will. But I do believe there's a bounce coming. Why do I say that? This setup, as we have a big bias. You have the COVID coming, COVID vaccines out. I think Electoral College will come into the thing. I think the noise from the other side is done, or from the Trump kids, not the other side, because they're Republican. Well, maybe they're Republican, but they're not the good Republicans we have in mind. Yeah, middle of the road, understand compromise and understand we need to all together. We need to move forward rather than call up to arms. But that should bounce up here, and the seasonality is positive. Everybody I talk to on the fundamental side says you gotta stay long here. Do not panic. They're all worried about January 5th. This is the Georgia election, and I agree. I think that's a problem. I mean, I think Loeffler is gone. I think she's lost. The issue becomes Purdue, because the spread is already too far with Loeffler. There's Purdue. I don't know why he didn't show up in the last event, but I guess he had a hard time before. But he's got his own trading issues too. So anyhow, my call is, if you ask me, the Senate is gone too. The Senate is going to be Democratic too. Not sure I want that. Okay, gridlock is really good for the market. Market won't like that. Probably that's where we're going to peak, January 5th. That's my current consensus. I mean, that's my current forecast. No consensus. That's my own personal opinion. Yeah. So the support here at the center line was crucial. We were getting some divergences here. You could see that. Absolutely right. But volume activity was mild. You see that? The down to up volume mild. So we're okay. Still, CI stays positive here. I'm saying the CI diff, CI itself is positive. I think we're going to continue that. Okay. Canaries. Real quickly. No. A little bit too tight. Let me go to a more detailed one. Okay. To me, this was very encouraging on Thursday. The movement on Russell, this green bar. Okay. We're going to see what we're going to be on. I got to look at Russell futures, but they should be up overnight. You see the formation? You got two back-to-back hammers. This one was not a hammer, but Friday was. I think we will pull up. We'll see. Today will be a big tell. 0.22277 on Momo. At the central line on SP1. Okay. And we're still buy, buy weekly, buy daily. Okay. This bothered me before. We talked about that. This always, when this thing pops, it's the indication of what's going on. It's coming too hard, too fast. Watch out. And if you go back on longer term, you'll see every time we have a big pop like that, we have eased back. Not immediately, but probably a month and a half, something like that to come. It's a very, very good early indicator. It's a number of new highs on the 52 for 52 last 52 weeks for S&P, pure S&P. So it's 500 names tops. Okay, I use a lot of stuff on the S&P. S&P is, if you go back, it's the one with the most detail, the most internals, shall we say? Okay, so it could be helpful if you spend some time, Keith. You spend some time, working on understanding it, acclimate yourself to it. Of course, I've had no choice. I've been at it since 2003. On full-time just prior to that, of course, it's if you do any studies, you'll see 80% of U.S. equities is S&P. If you look at the last 100 years, the return on all asset classes, S&P's beat them. Why? Going concern. There's a premium for a factory, for a company that has people, employees as a going concern. And because the top 500, there's always top 500 companies in the U.S., right? So it's an index to pay attention to, and it's 80% of U.S. equities. You compare to gold, treasuries, both the short end and the long end, real estate, oil. Forget regular commodities. I mean, you can, but there's no volume there. You can't. There's no depth. You look at even Forex, nothing beats S&P over 100 years. So that's the appreciation is. That's where most of the money goes. That's what capitalism was built on. Capitalism is built on SPX. If you want to think of it that way. The system is the solution. Don't forget that. And the system is SPX. So if you study it, you've built yourself. You have one lifetime. If you study it, you've tooled yourself up for the rest of your life to be successful understanding what the market conditions are. Because there's nothing like a payday from the market. There's nothing like a payday from the market. Yeah. Of course, could be a bit double-edged sword. We went up, came back down. That was a 3 sigma right there. Hello, are you with me? In terms of shock wave, you'd see what's going on there. Let me go into weekly quickly. Yeah, we got to hustle at 908. You could see the shock wave we're in. It's almost nothing, negligible. Still on their center line. This was obviously March and April. This was just recent, right before the election. Yeah, right before and then the election came and took it out. Okay, I don't like this OVX. It's just because of this. This all calculations are bad. We came up. There was a little bit of pressure. Let's see, what are we doing now? We're doing 0.7. Right now, you see it too. S&P's. This is the H21 contract. It's up 0.7% on percentage basis. But remember, they don't start at the same anchor point, if you will, for percentage calculations. But you see it today. We're up 0.5, almost 0.5 on NQH21, up for NASDAQ 100 futures, while S&P is 0.7. So again, now The S&P is underperforming. That's the word I'm looking for. It's underperforming here uh, for versus S&Ps. Uh, that's what we had a little blip up there. Here, I don't think these trade this morning. This does. VIX does. This is Russell. Russell's also quite. I mean, also center line, under center line on a volatility basis. Sorry, it's clear in my head. I'm not saying it properly. My bad. Uh, I would keep an extra eye on RTY, Russell futures, please. That's important. Okay. SQ. Hello. Yeah. Shut up. It should ease off. It should. If it doesn't ease off, all bets are off. Okay. This you can do it on your system. SKEW. This is the tail risk on the S&P 500, as played by as a downside tail risk, not the upside, because you have tail risk on each side of the wings, right? This is a downside tail risk. Large SPX players are involved. They're expensive by definition. You can go in there, but you're not going to be able to buy much. They're looking for block trades in that area, and it's getting more active. So that says we have issue coming, but there's a window. This window could be up to a month wide. Look at what time frame we're talking about. So there's the 14th. We're talking about January 5th. Yeah. So something is happening here. We need to pay attention to that. Okay. I don't need to go history of that. You've heard me before. Let's move on. We pulled back to 47. Support here is crucial to if my thesis is right, that we're going to go move up into at least New Year. I think this is the power, what you're going to see. Low volume, push it up. People feel good. This always has happened. Well, let's see how things go. Any bad news? COVID vaccination side effects could be bad news, or reactions, allergic reaction. Issues with no, I think the money situation is getting better. I think they're good. No, well, not on a balance sheet basis. No. Let's not talk about the balance sheet, please. Yeah, we're just printing money. Yeah, $3.1 trillion deficit last year. Fiscal deficit as of fiscal year ending September 30th. But at least new cash. The promise always is, let me spend your cash right now. I'll save you. Well, saving never comes, but you know the gig. So they try to get money out of. They have to. I see it down here. It's a tough environment here. Okay, and with especially the restaurants and so forth, some of the minorities, the less skilled people. You and I are exceptions. I think in my business probably it's going to actually spike, because if we get a shutdown, it'll be back like October. I mean, like March and April. People are going to be home. They have know-how. Why don't I trade? Here you go. How much government is going to help you? And they've done very well with those guys. So some people will come back. But ours is an exception. But others, I think you're going to see a situation that's very stressful out there. And we need to get, some of the numbers are exploding in some neighborhoods, especially like Midwest. And so people are going to go there, and hopefully we ease up there. I hope. But if we don't, that's the source of major pain. And so we need to keep this in check, see the 50 hold, and then go back to 75 and up. I think if the January 5th issue is right, probably they juice it up. So how do we see that? You'll see it by getting that number, the SP2 number, close to 75, or better yet, even maybe 85 area. Okay, so not too high, not 90, but the edge up here, somewhere in this range, these tops. You see what those tops are? We should see that by January 5th. And look like possibly these are the underlying stock RSI is showing that we're trying to race up there as another rendezvous point. This wasn't perfect. I was looking for this. It may come. I don't know. Okay. What else? This is the spread is right. Volume is 21. Yeah, 21 is still lead. Let me make sure this is lead here. 1 second, please. Okay. Again, that's it's 21. Okay. 20. Hold on. Hold on, Murray. Hold on. Hold on. Hold on. Hold on. December is still lead, right? Yeah. December. Oh. Oh. Oh no. Oh no. Okay. F21 is ahead. So rollover has already started because it's a year. Okay. All right. So we have to change this. 1 second. We're gonna go to uh, uh that's it. F21. That's January. And then we're going to go to April on that. And that should be J. That should be a J21. Okay? Yeah. Is this oh, is this the one? Huh? Come on, check. Oh, okay. Here's the curve. Okay. So we're at 1.40. I have to see if we have put a displacement or not. But if I think we have, let's see. The big spread is a displacement. No, zero. There's no displacement. Oh wow. Oh wow. We are normalizing. Oh wow. Jeez. Okay. Now I can relate to this. I used to have a displacement function. I had to add that from the start of COVID. I had to put that in because it's been just went so wild early back in the March, early March on. It was so crazy. Wow. That's another good news. The market structure is getting normalized. That's why the margins came down. You guys saw the margins, right? Well, the margins. This is futures margins. Okay, we're at 25%. Tomorrow they could drop it 12.5. Okay, I think they could after the Fed meeting effective for Wednesday. But that would be 8-1. Right now it's 4-1. Day session versus night. I won't hold my breath. I think that will come after January 5th. Yeah. As long as we don't have a crazy drop that did. But especially like one wins, one loss, then you see 12.5 margin, which is 8-1. That's what it used to be for a number of years, I would say. Okay. So keep an eye on those. These are all different tea leaves you read to see what the thinking is, what the input is, and then you make your own final gut feel that, hey, this is what I want to do. Including what I say. That's just another tea leaf you're reading. Keep that in mind. I've been wrong before, and I'll be wrong in the future too. So, not God. No, I'm not Alec Baldwin. Remember in movie Malice, I am God. Yeah, no. So, okay, let's go to one of my favorite charts here quickly, and then we jump into futures. I'm a little bit rusty. My apologies. Here we go. There we go. Okay. Let's blow this up a tad. Okay. Okay. Huge run up there. And unprecedented. Absolutely unprecedented that went up like that. And I think that was a relief rally. Absolutely was. Actually, I haven't seen this in the probably 2 or 3 trading days. But from here on, I had that feeling this is possible. Why? We always talk about separation of moving averages. These are two moving averages, 20 and 50. When that separation widens, something is happening big. Now, my opinion is we've gone too far. And right, because this is a scoring indicator, it's not a price indicator. And we must have hit 94, 95, 90, 93, whatever up there, which is remarkable. Remarkable. So it's easing off, and along with SPX easing off. So there's no signal there. That's correlated. Uh, yeah, hold on. I just saw this. Hold on. You can see how busy I've been. Yeah. I know some people have said, I need an update. Oh, let me say this. Some people have said, I need another trade. I haven't. I will. I intended to put one on Friday, and I did not get into it because I just started a number of issues. I got to make time. I'm going through a lot. That's not an excuse. But sometimes walls are high. When the walls are high, and this was not just this period, this was earlier, right before the election time. A gentleman wrote to me last night or Friday saying, You're not giving us trades. I said, I'm giving you signal. I'm giving you direction. I haven't been quiet. I'm not giving you a trade. Walls are too high. One thing I learned a long time ago, and you need to think about that. In no trade is the advice itself. May not be able to delineate that properly with everybody. Maybe I'll do it in a webinar. But you gotta realize if there is no trade out there that I'm giving you, that in itself is advice. The advice, you're not buying advice that keeps us saying buy long, buy short, sell short, buy long, back and forth, or go flat, come back in. No. Sometimes if the situation is not primed properly, you want to step back a little bit. And that's all it is. Okay. Anything else I need to do? Futures overnight. Okay, Jack. Let's go over there. Okay. We're up. We're up again. This is what I was talking about. 0.73% versus 0.52. Again, Nasdaq is underperforming. We're clearly the volume is on H21. It struggled on Friday to catch up on the NQ side. ES was already crossed over by midday, but we're clearly on H21. That makes our OTF comps calculations going well. And then this is overnight stuff we do for you. The charts are updated. This is some of the stuff I look at. I have it on your screen too, on the NOC and the NOC. The next years of computing by Intel. We have the NQ Skype there. This is what I show you guys. This is give extra copy. And then sometimes when I get a chance, I keep looking at this thing very closely. That's all. Okay. Thank you guys. Let me shut this thing down and we go to ending the recording. Saving it to the cloud, okay? Ending the recording here. See you guys.